They typically make huge mistakes and then they get bailed out, then they get another payday. So it's in their best interest to just be as reckless as possible.
Welcome back to Library of Wealth. Today we have Bitcoin bull Max Keiser giving us his take on the current trend of the economic market and what's coming in the last part of 2023. Keiser notes that with global central banks increasing their rates, typically this would cause the dollar to climb. However, with market pandemonium and hardship to countries' fiat currency around the globe, financial turmoil is at an all-time high. Banks are now trying to get interest rate neutrality while trying to avoid absolutely demolishing the global economy. Keiser is noticing more and more institutions in charge of money printing are legally taking capital from people in numerous ways. As conditions worsen, this trend becomes a massive red flag to investors who are becoming reluctant to turn to cryptocurrencies like Bitcoin as a safe haven asset. Let's listen to Max Keiser as he talks about the future success of Bitcoin and why now, more than ever, is the time to abandon the sinking ship that is fiat money.
You know, last week, as we reported, there was quite a bit of turmoil in the UK bond market and the UK currency. The sterling fell almost 5% in one night. Well, here's an excuse from BlackRock, the biggest, I guess, investment fund in the world. And this is what they said about their role in it. They said BlackRock executive defends pension strategy that fueled a UK crisis.
Right, so a few things. Number one, the response by policymakers in the UK, the Bank of England getting involved, essentially was a bailout for BlackRock. And this reminds me back, when Gordon Brown was the Chancellor of the Exchequer, and he stole 300 tons of gold on behalf of the British people to bail out Goldman Sachs at that time. And here you have the Bank of England once again stepping in and bailing out a big Wall Street player. In this case, it's BlackRock. Whatever strategy they're using, I can tell you that number one, it uses derivatives in a reckless manner. And every time derivatives are used recklessly, there is a crisis, there's a failure, there's a counterparty issue, and they need a bailout. But the bankers over at BlackRock or the bankers at Goldman Sachs get paid on the volume of deals, not whether or not the deals make any sense or make any money. It's all deal volume. Volume pays. They typically make huge mistakes and then they get bailed out, then they get another payday. So it's in their best interest to just be as reckless as possible.
Many pointed out that Chancellor on brink of third bailout for banks. Of course, when the crisis was looking like it was going to be centered on the UK, perhaps it might be on Credit Suisse or Deutsche Bank. And next week, who knows? But the point is that we were having a crisis again caused by bankers and the derivatives products. Back in 2008, and when Satoshi Nakamoto printed the Bitcoin white paper on October 31st, and then, of course, the first block was mined on January 3rd, 2009. It was Chancellor on brink of second bailout for banks. So here at that time, it was caused by what was called, remember, CDOs. That was the word of the year, collateralized debt obligation. Now they're calling it liability-driven strategy. So there's always a new word for whatever the risk they have piled on to the global system. And as you point out, they received a bailout in this situation. BlackRock, of course, is entering the Bitcoin game, and wait until they find out that there's no bailout available in Bitcoin.
The names of these products change all the time, but the underlying reckless derivatives composition of the products is the same. It reminds me of that scene in the great TV show in America called The Wire, where you see the peddlers of heroin would go around the street and call, hey, I got your WMDs, I got your WMDs. And every week or so, they would change the name of the heroin. It doesn't change the fact that it's basically the same heroin and it's killing people. Here you have Wall Street selling derivatives. They're the same derivatives. They're over-leveraged by 100, 200%. They're underlined by nothing except counterparty risk that's insured by bankrupt insurance companies. And it results always in the same thing, financial death. So nomenclature is important because it makes it easier to sell stuff to unwitting pension fund managers. In the case of the UK, their pension funds were under threat because the manager of those particular funds was completely incompetent, as almost anyone who runs a pension fund is incompetent. It's the very definition of what's called dumb money. The entire financial world is divided into smart money and dumb money. BlackRock and Goldman Sachs are smart money. They get paid no matter what. Pension funds typically are dumb money, and they're called dumb money on Wall Street, and those guys always end up eating a bag of worms.
Of course, World War III is also not possible without a global beggar thy neighbor policy that was, of course, part of the global turmoil that led to all that period of World War I and II that we know. And now we have another global beggar thy neighbor policy. Partly it always arises to that moment, right? Because of the global setup with an all fiat currency of the US dollar. The situation is that the debts pile up in the US, inflation spirals, they need to raise rates, that causes the dollar to spike, and then all the global debts around the world, but also the developing countries, of course, their fragile currencies start to wobble and hyperinflate, and we see the crises that we see unfolding in Sri Lanka, Pakistan, where they can't get, goods like oil or natural gas, which is now, because a huge swathe of the market is unavailable, it's sanctioned. But on top of that, the dollar is sanctioned in a way, effectively, because there's a lack of liquidity because everybody wants dollars. So they're all rushing to buy these dollars. So we have a situation where, a lot of the third world, developing world is hungry right now. So into the fray, into this mix runs the UN. Well, the UN calls on Fed, other central banks to halt interest rate increases. The United Nations Conference on Trade and Development warns that the Fed further increasing interest rates can cause significant harm to developing countries. UNCTAD estimated that the Fed's rate increases so far this year would reduce poor countries' economic output by $360 billion over 3 years. As a result, this number will only rise with an additional rise in inflation.
There's two policy errors you can make. One is your interest rates are too high. The other is your interest rates are too low. Now, where was the UN 10 years ago, 5 years ago, when the central banks were coordinating a massive downtick in interest rates, even into negative territory, and moving trillions of dollars out of the pension accounts, savings accounts of mom and pop, of average people in the working class to fuel the bailout of the financial speculators on Wall Street? Where was the UN during that financial crisis that caused trillions of dollars worth of damage? Okay, suddenly in 2022, interest rates are high, and they're saying, oh, what about all this damage from the artificially high interest rates? Here's a message to the UN. Shut the central banks down completely if you want to eliminate these problems, and let the market decide, as it had been doing before central banks were invented. That's the solution.
Keiser advises holding on to all Bitcoin because it has future merit and cannot be destroyed by money printers. The next generation knows that Bitcoin has long-term value, and it will aid in a financial security that is unmatched anywhere. He has seen that the people of El Salvador save their Bitcoin because they understand that it has a future, and there will come a time when its purchasing power will dramatically increase. Paper has in essence been destroyed by rampant money printing. Gold offers a few advantages over fiat, as it's mainly measured in weight, though there is a risk of fraud. Bitcoin is superior to both, as it's authenticated by itself through mathematics and encryption. What do you guys think of Max Keiser's take on the purchasing power of Bitcoin? Let us know in the comments below. Thanks so much for watching. Don't forget to hit the like button and subscribe for more content just like this. We'll see you in the next video.